The next question is E7.5. On June 3rd, Bolton PLC sold to Arcade Company merchandise having a sales price of 2000 with terms of 2/10 and over 60. And in fact, totally 90 terms and over 30 was received by Arcade on June 8 from John Booth Transport Service for the freight costs. On June 12, the company received a check for the balance due from Arcade Company. So A. Prepare journal entries on the Bolton PLC books to record sales and receivables, all the events noted above, under each of the following bases. The first point, sales and receivables are entered at gross selling price. The second point, sales and receivables are entered at net of cash discounts. And then B. Prepare the journal entry under basis A.2, assuming that Arcade Company did not remit payment until July 29. So this is just the similar sales transaction that you have learned in accounting 2. However, now there are two methods actually. So if you use the gross selling price, it will be similar with what you have done in accounting 2, meaning that you will record the sales and receivables at 2000 as the gross selling price. If you use the method of net of cash discount, it means that your sales and receivables are recorded at the amount of the selling price minus the cash discount already. Yeah, so it is assumed that the customer will pay in 10 days to get the cash discount. Yeah, so that is the only differences between the two methods. Okay, so if we do the A.1, so it's very easy. On June 3rd, okay, we just record the transaction, debit accounts receivable, credit sales, 2000. Yeah, so because we don't know how much is the COGS, so we just assume it's a periodic system. And then for June 8th, it is not Bolton PLC transaction. Yeah, it will be recorded by Arcade, our customer. Okay, so there will be no transaction that will be recorded for Bolton. And then on June 12th, Arcade paid the receivables. Yeah, so it's still under 10 days. So Arcade Company will get the cash discount. So just like the way you do usually, so debit cash, debit sales discount, credit accounts receivable. So the accounts receivable will be 2000, the sales discount will be 2% of 2000, which is 40. So the cash that you will receive is 1960. And then we go on to the net of the cash discount method. Okay, so once again, you will record the accounts receivable and sales, yeah, under the amount of net of the cash discount already. Yeah, so that's why here in June 3rd, you will record the amount of 1960 already. Yeah, so it is assumed that the customer will pay it under the discount period. So 2000 minus 2% of the 2000, it will be directly 1960. And then when the customer paid the Bolton company, okay, so directly debit cash, credit accounts receivable 1960. So there will be no sales discount under this method. Yeah. And then B, let's say if Arcade Company paid at July 29, so it will be already over the discount period. Yeah, so how is it if the customer has passed the discount period already? So this will be the uh journal entries. Yeah, so debit cash 2000, because the cash discount is not taken by the the customer. And then we will credit sales discount forfeited. So it means that the customer, okay, is not taking the discount. Okay, so that would be sales discount forfeited. And then credit accounts receivable of 1960. Yeah, so that will be uh the journal entry if the customer is not taking cash discount under net method.